Hello fellow traders, Marv Eisen here from Timeless Dollar Trading Academy. And I just want to remind all of you who have the Taylor Trading Calculator that using it requires that you carefully monitor the intraday high or low and try to determine where it is within the first half hour or hour of the day. And let me explain. The intraday high or low is the highest or lowest price that the market puts in during a given trading session. Now, typically, it's put in within the first half hour to hour of the trading day. Not always, but most of the days. Now, here is my chart of the E-mini on Tuesday, April 30th. And my trading range, which I drew out before the market opened on Tuesday, showed a resistance at 51.64 and a support at 51.23. Now, prices opened right about 51.31, the lower quadrant of the trading range, but using the Taylor trading range requires that you monitor the intraday high or low and transpose the trading range to match the intraday high or low to find where the other end of the market is likely to trade the rest of the day. And so here on Tuesday, April 30th, the prices opened at 51.30, traded, not quite reached the previous close at 51.47, but immaterial to that. The intraday high, and as we can see, the intraday high was put in at just about at 9:45 and didn't really get taken out through the rest of the morning. So by 10:20, 10:30, an hour after the market opened, we can determine that if this is the likely intraday high, where will the market trade for the rest of the day? So what we do is make a clone, a copy of the trading zone. And we do this by, and I'm using the trading view chart, we do this by making a clone and taking the clone and moving it to the intraday high, transposing it. So I'm transposing it to the intraday high right about over here at 51.41. And so we determine that the market is going to trade down to 50.99 or thereabouts. And sure enough, that's where the market traded down to. So that's how we use the Taylor trading range and transposing it in order to determine where the market is likely to go. Now, I'm going to do the same thing on Wednesday, May 1st. Here's the chart. And I put my trading zone on the chart, resistance at 51.35, support at 50.73. The market opened nowhere near or inside the trading zone, but nevertheless traded pretty much in a very narrow range. And there are 10 points between each horizontal line on this chart. So actually 10 points for most traders. 10 points is a significant day. But nevertheless, the market traded within this relatively narrow trading zone. And so by the morning at around 10:30, we could determine the intraday high was right over here that was put in at 9:36 at 50.62. And the intraday low, if that's the intraday low, is at about 50.46. So we can determine that the trading zone, let's transpose it. And we're going to transpose the trading zone. I'm going to make a clone. And I'm going to clone it to the intraday high. So this is one possibility. And I'm also going to clone it to the intraday low. Let me make another clone. Intraday low. So I'm going to move this clone to the low, which was right over here, okay? Right about over here, okay? The intraday low. So I could determine the market was either going to trade down to around 49.99, call it 5,000, or up to around 51.09. And so these are the two possibilities. And so of these two possibilities, where did the market trade? Right up to about 51. It traded actually higher, but nevertheless, it reached the other end of the trading zone and actually through it. So this is how you use the trading zone to determine where the market is likely to trade. That's my video for today. Marv Eisen from Timeless Dollar Trading Academy. Trading is simple, but it's not easy. But you need to know the Taylor trading zone, the stochastics, in my opinion, and the 6 trade setups that I teach in my course. GST, TMC, gap, support and resistance, trend, time and price, momentum, and candlestick. There are only 6 trade setups. So you can learn those 6 trade setups and use them profitably. You can use the Taylor Trading Zone. I use the stochastics as a means of where is the likely point of getting on or off. And you can learn how to trade consistently, not necessarily make profit on every trade. And of course, nobody's going to make a profit on every trade. But learning how to trade is the best way to approach trading as a business. So that's my video for today. Marv Eisen for Timeless Dollar Trading Academy. Trade safely, use lots of patience, and I'll see you in my next video.